How's it going, everybody? Welcome back to the Crunching Numbers YouTube channel. Today we'll be taking a look at the statement of cash flows within accounting. So whether you're studying for the FAR CPA exam or you're in an intermediate accounting class, then this is definitely the video for you. Now, within this video, I'll be giving a broad overview on what exactly the statement of cash flows is, the different sections within a statement of cash flows, just to provide you with a general understanding of what it actually does within accounting. And of course, we'll be providing a couple of examples of the different methods on how you can prepare the statement of cash flows. So that being said, let's jump right into it. So like I just said, just providing you with some quick background information on the statement of cash flows. So what exactly is this statement of cash flows? Well, it's a statement that is included within a full set of financials when an entity releases their financial statements that displays information on the sources and uses of their cash and cash equivalent transactions. Now, what exactly is included in the statement of cash flows? Well, cash and cash equivalents. So cash is the actual cash, such as any type of currency being used, and cash equivalents can be any short-term liquid investments or investments that are quickly convertible into cash within 3 months of maturity when purchasing that investment. Now, what is the actual purpose of a statement of cash flows? Well, it allows different external parties such as investors, creditors, and any other interested parties to view information surrounding a company's available cash and cash needs. So an important concept to understand when preparing the cash flow statement is that there's actually two different methods that can be used to prepare this statement, the direct method and the indirect method. So with the direct method, it includes both an operating section, investing section, and financing section, just like the indirect method. However, the main difference comes within the operating section. So this section begins with cash received from customers. It also shows the major classes of cash receipts and disbursements, and just make sure non-cash items are not included within this section. On the other hand, the indirect method also includes the operating section, investing section, and financing section. However, the main difference also comes within this operating section, where it begins with things like net income and includes non-cash items in the reconciliation of this section overall. Now, just keep in mind the investing and financing sections will be the same for both of these methods. So with that being said, let's take a little deeper look into the operating activities when using the direct method. So just reported on the last slide, the first transaction would include cash received from customers, and then in the following order, you want to make sure that it displays the interest received, any dividends received, other cash receipts such as insurance proceeds or any lawsuit proceeds, then cash received from sales of securities that are classified as trading, so just note not available for sale securities or held to maturity securities, just trading. Next, cash paid to suppliers and employees, then interest paid and any income taxes paid. Next, cash paid to acquire securities, again classified as trading. And finally, other operating cash payments such as selling and general expenses. Remember, these are the operating activities when using the direct method. Now, on the other hand, let's take a look at the operating activities when using the indirect method. As previously reported, we said we're going to start off with net income, and then we're going to add back any depreciation and amortization. Those would be our non-cash items. Add back any losses incurred, subtract back any gains incurred, subtract back any equity earnings, subtract back any changes in operating assets, and then finally add back any changes in operating liabilities. Now remember, the investing and financing activities would be the same for both the direct method and the indirect method. So let's take a look exactly what's included within the investing activities for both. You'd want to report the loans made to any other entities, any purchases of available for sale securities or held to maturity securities, any purchasing of property, plant, and equipment, and if you purchased another entity. Now just keep in mind investing activities surround activity involving non-current assets. Now taking a look at financing activities, which again would be the same for both the direct method and indirect method, you would want to report any issuance of stock, if you paid out any cash dividends, obtaining resources, which in this case would mainly be cash from other entities through bonds, notes, and loans, and any payments of principal on those bonds, notes, and loans. Keep in mind financing activities surround activity involving non-current liabilities. So investing, non-current assets, financing, non-current liabilities. Now that we have the three types of sections out of the way and the different types of activities included in each section, I thought it'd be beneficial to show one direct method example and one indirect method example. So starting off with the direct method here, we're always going to start off with the operating activities section. So you would just display a header cash flows from operating activities. And as we previously explained under the direct method, under the operating activity section, you're always going to start with cash received from customers. Next, you would just display out all the activities that are included in the operating section, and of course net that out at the bottom with a net cash provided by operating activities. However, note that this balance is positive, so it would be net cash provided by operating activities. Moving on, we would do our investing activities section, so cash flow from investing activities. And here we have a purchase of property and equipment. Next, we want to net that out with a net cash used in investing activities. And if you take a note here, we have a negative net balance of 101 because we're purchasing a non-current asset. So it would be net cash used in investing activities. Finally, rounding off, we want to display our financing activities section. So we would just have cash flows from financing activities. We have the different types of non-current liabilities activities here. And of course, we're going to want to net that out, which we come to 109,500. And the net balance in the line provided, net cash provided, used in financing activities. And of course, we just want to display our beginning cash balance, which in this case was 0, and then our ending cash balance of 32,800, which we just come to by adding up all the lines for the net cash in the operating activity section, net cash used in investing activity section, and the net cash provided in the financing activity section to come to 32,800. And here's our indirect method example. So again, we're going to start off with our operating section. So cash flows from operating activities. However, previously stated in this video, when we're using the indirect method, we're going to start off with net income and display the different types of operating activities to get net cash provided by operating activities at 24,300, since that net balance is a positive. Next, we have cash flows from investing activities, which is the purchase of property, plant, and equipment, again for 101,000. Since this is a negative balance, it's going to be net cash used in investing activities. And then finally, for our financing activities, you're just going to display the various activities as previously stated to come to net cash provided in financing activities of 109,500 to come to a net increase again of 32,800. Just a different way of stating the net cash provided / used during the period. So again, beginning cash balance is 0, and then you just add on the net balance of all three sections to get our ending cash balance of 32,800. And I hope this video provided you with just a high-level, broad understanding of what exactly the statement of cash flows is, the different sections within a cash flow statement, and some nice examples to show you the different methods of the cash flow statement. But with that being said, I'll leave you with the question of the video. If an entity made a dividend payment, what section of the cash flow statement would that be included in? Make sure to leave the answer in the comments section below. First one I see correct, I'll pin at the top. Also, leave in the comments section below any videos you would like to see me make in the future or any recommendations of a concept you want me to cover. With that being said, I hope you enjoyed this video, and I hope everyone has a good one.